Did you know that there's a lot of things that you could write off, even a swimming pool, if you do it right and you start a business? So in this video, I'm going to talk to you about how to start a business for tax write-offs. I do have some exciting things to share with you, but I got to give you a disclaimer, okay? Everything I say, you need to run it by your CPA first, and you got to be smart and you got to do things right. The primary purpose of a business is to make profit, and to start a business just for tax write-offs, that's tax evasion, okay? And I do not recommend tax evasion whatsoever. But if you start a business and that business is profitable and you can write some cool things off, then it works wonderfully. I first learned about tax write-offs from Rich Dad Poor Dad. Okay, Robert Kiyosaki wrote that book, and he talks a lot about business compared to being self-employed and compared to being an employee, the advantages that business owners get, and all the different things that businesses can write off because they're expenses for our business. The IRS only wants to tax us on our income, not our gross income, but on our net income. And so all the expenses that are in there, those are business expenses, and we get to write those off. I remember one of the first examples that I learned from Robert Kiyosaki is talking about a yacht. And it's funny because that example might not even be in the book, but as I remember it in my mind, if you want to buy a yacht, the question is not, how can I write this off on my taxes? The question should be, how can I create a business around a yacht, a profitable business around a yacht? And therefore, the yacht would be a business expense. It would be a tax write-off. So if I created a charter company or some type of a tour or whale-watching company where I'm going to make revenue from taking customers out to view whales or taking them out on an ocean charter or something like that, then of course it would totally make sense and the IRS would totally support you in having your yacht be a business expense. Now, I'm sure your CPA has all the rules about what percentage you can use it for business and what percentage you can use it for personal and pleasure. But do you see how amazing this is? You can create a business around something that you're passionate about something that you enjoy, something that's fun, something that a lot of people would consider a luxury or a vacation. So first and foremost, focus on this being a profitable thing. If you want this to be long-term, to last many, many years, you can't just set it up and have it be a business expense if you're not actually pursuing it, if it's not actually bringing in revenue, if it's not a real business. All right, so let's talk about some other common examples of business write-offs, and then we'll talk about some more extravagant things like the yacht. What about a laptop? Or what about multiple laptops? Okay, that's a pretty common business expense, and the reality is it a business laptop or is it a home and family and homework laptop for your kids? If it truly is a business tool, you're going to use that in your business, you keep it at your office, your team uses it, you use it for work, then it's legitimately a business expense. You want to purchase that with your business account, and you can categorize that as business equipment, and of course, it's a write-off on your taxes. But what if, and I'm just making this up, what if your business was a dog walking business, and the way that you did advertising was knocking on doors and handing out flyers and getting phone calls? So maybe your phone is a tax write-off, but if you don't really have a legitimate way to use your laptop in your business, then that would not be a tax write-off. Okay, another one that I invite you to consider and to calculate and to track is your car mileage, the distance that you drive. Now, laws are different in different states, I believe, so I would trust the advice of your CPA, but look into that and keep track of how many miles you drive and separate personal miles from business miles and where you're going and whatnot, and your accountant will sort that out for you. Now, you can actually write off food, but there's a couple of ways of doing it. If you're going out dining, and having a meal, maybe you and a client are going out to lunch, my understanding is that you get to write that off 50%. So if the bill comes to $30, then $15 of that is a tax write-off. But if you're putting on an event and you hire catering to come in, or you buy a whole bunch of groceries and it cooks everything in the kitchen and caters this whole event for everybody that's there, that's not a dining experience. My understanding is that that counts as catering, where you get 100% write-off. So what about travel? What about lodging or airfare, right? Rental cars. If you're going on a business trip, you're going to a conference, you're going to meet a client, you rent an Airbnb that is your filming studio, all of these things are business expenses. But if you're going out to Orlando and you're bringing your family with you, and you're going to Disney World the whole week and you're not doing any business, then very clearly you cannot and should not write that off as a business expense. Clothing is another fun category because most accountants will say, well, you can't really write off clothing unless you put your business logo on it. So if I put Be the Hero Studios on my shirt here, then I could write it off. That's pretty cool. You can just put your logo on any clothing you want and write it off. That's my understanding of that rule. But what about Hollywood? What about the production of a movie or a theater company? They've got all these costumes and wardrobe. So I actually have clothing that I don't wear in my personal life. I don't keep it at my home. I keep it at my filming studio, and that becomes costume. So that clothing makes sense that it's a business expense. Okay, let's talk about a fun one. I have 2 Teslas. I have a Tesla at home. That's my personal car. And while I do put some business miles on it, I bought it with personal funds, and it's not a business expense. The purchase of that car, the electricity I use to charge the car is not my business expense. But I have another car here in Florida. It's a Tesla. It's the same car. I really like the Tesla Model Y. It's the same color, and it's 100% a business expense because I use it when I'm in town instead of renting a car to get around when I'm here for business. Now I own a car, but the other time I have it rented out. So I put that car on Turo and I have somebody managing it for me. And so they handle all the customers. And so it actually brings in revenue. The amount of money I make on this Tesla is more than my car payment and my insurance and all the expenses added up. So my Tesla in Florida is actually making me just a teeny bit of profit, but it's not an expense, and I get to write off all the expense for it as a tax write-off. Now you may be wondering, I'm in a pool. I'm in a swimming pool. The swimming pool is a tax write-off for me. This is not my home. This is my filming studio, and all of my clients, we use this as one of our backdrops for filming. And on rare occasion, I get to swim in it, but this is a business expense. We use this for business. Now I have 2 requests for you. 1, get the advice of your CPA. And 2, don't do your taxes yourself. Let your CPA do your taxes for you. Now, with that understood, would you like to know how to make a lot of money in your business? I've got another episode. It's how to make $1 million in a year in your business. So go watch that video next.